Hi Bloomers, it's Wendy, and you're listening to Bloom with Flores. In today's episode, we delve into the world of real estate with a seasoned professional who brings invaluable insights and expertise to the forefront. Danilo Martinez, a distinguished agent with a wealth of knowledge and years of hands-on experience, shares some practical tips and profound wisdom garnered from navigating the complexities of the real estate business. Also, don't forget to like and subscribe. We appreciate you tuning in and the love you give when you subscribe to our channel. Hi, Danilo. Thank you for joining me on my podcast today. I'm thrilled that you agreed to discuss real estate in Ontario. Any predictions or guidance as an experienced real estate agent would be greatly appreciated. So without further ado, please feel free to introduce yourself.
Hey everyone. First of all, thank you so much, Wendy, for having me on your podcast. Really great. And my name is Danilo with the King Realty Group and TorontoSearch.ca here in Ontario.
Can you provide an overview of the current real estate market? Is it a buyer's, seller's, or neither market?
I would say the market's very interesting right now, and it really just depends on what you're trying to do. Based on numbers and, December 2023 numbers, end of year, I would say that the numbers show that it's kind of a balanced market, meaning that, it's not heavily favored for buyers, neither heavily favored for the sellers. However, it really just does depend. If you're trying to sell a condo, most people would tell you that it's a buyer's market. There's a lot of inventory. And there's a lot of deals that buyers can take advantage of because there's just a lot of inventory, meaning there's many condos for sale at the moment. However, if you're talking about low rise, like a detached or a townhouse, or like a semi-detached, something like that in certain areas, I mean, some people are getting multiple offers in January 2024, where people are listing prices a little bit lower than what they're expecting. And, multiple buyers are showing up. So it really just depends on which micro market. I mainly look at the GTA here. So that includes Toronto, Durham, York region, Peel region, and even Halton region. So yeah, I would say it depends. It could be opportunities for people looking to buy condos, and there could be opportunities at this moment for sellers in the low rise side of things. So it's a kind of a long answer there, but hopefully that makes a bit of sense.
No, it does. How has the interest rate hike affected the real estate market?
So it's impacted the real estate market a lot. Initially, let's start back in 2019, 2020 when COVID first showed up. Obviously, the economy slowed down quite a bit because people weren't able to leave their homes and go to work. So for the government to keep the economy afloat, they dropped the interest rate quite a bit, which kind of caused people to flood into the real estate market because they were able to get cheap mortgages. Some people even, in the 1.5, 1.3, like I've even heard like 1.3, 1.5% rates way back then, under 2%. And now, well, we're starting to hit, 2024, 2025, where a lot of these 5-year fixed mortgages are starting to come to renew. And obviously in the last 2 years, we've had, I want to say 8 increases of interest rates, and we're now at 5%. The Bank of Canada overnight rate is 5%. So it's increased quite a bit. Just to give you, I guess, a comparison, some people were getting, 1.5% rates back in 2019, 2020. And now a fixed rate might be, in the high 4s. Or low 5%, and a variable rate might be actually closer to 6, if not above 6% at the moment. So the difference is quite big. And what the interest rate increase has caused, it's caused prices to come down quite a bit in a lot of different pretty much all segments of all home types, including low rise and high rise. And it's also caused the buyer to struggle to qualify because it's very hard to pay such a high interest rate and handle the monthly payments every single month, because they're just really high payments. Just to give you an example, if you're buying a $500,000 or $600,000, $100,000 condo, which is like an entry level price, your payment could be $3,600 to $4,000. When you include your mortgage payment, your property tax, your insurance, your maintenance fee, and utilities. And that's quite high for most people, I would say. So, I mean, yeah, I mean, initially it made prices go up when they dropped the rates so much. And now that the rates have gone up, it's caused the prices to come down, and it's caused a lot of people to be on the sidelines waiting for some interest rates drops in order for them to jump back into the market. Yeah. And it's also caused the rental rates to go up as well because a lot of people weren't able to buy. So, they had no choice but to rent. And the rental rates have been quite high over the last maybe year and a half. So that's what's happened.
So, how have recent economic conditions influenced real estate? I know there's been a lot of layoffs. There's been a lot of people leaving the country, even.
Yeah. So, first of all, even before all this, like there's been a lot of people who have been leaving the GTA, going to, different markets just for price points. Um, and yeah, I mean, it's really hard to stay in the GTA. It's really hard to buy a property in Toronto. Just things are really expensive. Um, so it's impacted people quite a bit. Like I mentioned before, there's a lot of renewals coming up where people are going from like a 2% rate and they're now going to have to refinance into like a 5% rate. In some cases, that could be an extra $700, $800, maybe even $1,300, $1,500, depending how big your mortgage is per month, and that's going to be tough for a lot of people to be able to handle. And it's possible. And I want to say that the majority of mortgage renewals, I want to say like a good almost 50% of them, it might be even higher than that, are coming up in the next 2 years. And, if we don't have any interest rate change in the next little while, I mean, it's going to impact a lot of people. It may even cause some people to sell their homes because they won't be able to handle the payments that are coming up. So there's probably a lot of that we haven't really seen yet, but there's probably going to be another little wave of sellers coming onto the market because they can't handle the payments. So it's definitely impacting people. And a lot of people just aren't buying and they're just staying where they are because they're just, they're scared to make any movements. So, yeah.
Yeah, I mean, I haven't seen these numbers in my time at least, right? And I've kind of been a homeowner for a while now.
Yeah.
So this is for me, it's mind-boggling and it's just a little crazy. But for new home buyers, what do their down payments currently look like?
So the down payment itself has probably come down because the price has come down, right? So prices have come down over the last couple of years, which means that your down payment is lower than it would have been, let's say, in 2022 when prices were kind of the peak, the highest they've ever been. The month was February 2022. That's like the highest price point we've ever had. But since then, it's dropped quite a bit. So I would say that the down payment amount, I mean, it's still a minimum of 5% up to $500,000, and from 500,000 to 999,999, just under a million, that's an extra 10%. So I mean, it could be as low as that still, depending on the price point. And if you're buying a property over $1 million, then it doesn't matter if you're a first-time home buyer or not, like it's 20% down. But because prices are down, I would say that they're lower at the moment. So, for a buyer, there are some opportunities. You're able to buy property maybe at a cheaper price. And I think you just need to do your homework, speak with your mortgage broker, and run some numbers to see if you can handle the monthly payments at the interest rates that we have today. There could be a benefit there if you're able to handle that payment, buy a house at a cheaper price today, because the consensus is, and it's likely going to be this way, that in the maybe next couple of years, maybe even some point this year, 2024, whether it be spring, summer, or fall, we might see some interest rate decrease. And at that point, whenever you do refinance, you're likely going to be getting a lower payment in the future, which is a little different than what most people are used to. So there's a possibility of you buying a home at a cheaper price, handle the payments for now, and when you refinance at a lower rate later, you might actually have a lower payment, and your property is probably going to be worth more because once that interest rate comes down, there's going to be probably more buyer activity, more people trying to buy it, and which will push the price up most likely. Yeah.
That's some good advice, Danilo. Thanks for that.
No problem.
What kind of expenses should new home buyers anticipate prior to purchasing a home?
So that's a good question. And this is why I always, when I speak to a buyer, especially a first-time home buyer, I like to kind of paint two pictures. Like there's two different things that you need to kind of pay attention to. It's really nice to, know what your max approval amount is. Like somebody could say, a mortgage person could say to you, well, you can buy as high as 800,000. And that's great. So like what your purchase price is, but what does that mean on a monthly basis to you? Like, and that all really depends because the mortgage broker can also tell you what that rate is. They can tell you what the mortgage amount is. So that's one thing, your mortgage payment, the loan payment. The other thing you need to pay attention to is your your utilities. So that's going to be your gas, your hydro, your water payments. Okay. And so for like a regular house, that could be $300 to $400. When I say regular house, like a single family home, I don't know, 3 bedroom, 2 story, 1 car garage or something like that. It's probably like 300 to $400. On the taxes side, depends on what city you're in. I mean, Toronto's about to get a 9% increase, but like it's generally speaking one of the lower taxed cities in the GTA and Ontario, I would say. But I mean, you're looking anywhere from like 2,000 on the low side to like as high as, I mean, I've seen houses have tax yearly taxes of 10 grand, 13 grand if you're like have a big house in Pickering or something like that in Durham. So it's property tax, utilities, your mortgage payment, and also some insurance, right? So your insurance, you have to have home insurance, at least you should, to protect yourself. And those are really the things you got to look for. And you should have some extra cash on the side outside of that. You don't want to be house poor. You want to be able to go and have dinner with your family or, go have a beer or a glass of wine or something like that and go out on date nights or something like that. So, you always got to kind of pay attention to not just the purchase price, max purchase price that you have, but also like your monthly commitment, what's your expense, and you got to have some breathing room there as well. So
Yeah.
that's
So
what we look
you
out for.
mentioned the max purchase price. You're talking about the pre-approval, Danilo?
Yeah, that's correct. The pre-approval. So when your mortgage broker or bank is assessing your pre-approval, they're going to be looking at like 4 different things. They're going to look at how much down payment that you have. They're going to take a look at, so that's your savings, right? They're going to take a look at your total income, right? They're going to take a look at your credit score, and they're also going to take a look at any of your debts. Those 4 things mixed together. They use ratios, a GDS, TDS. I'm not going to get into like the little details there, but there's a percentage based off of like your income, your total income. It's in the 30 to 40% range. Okay. So look at your total debts, what savings you have, what's your income, and what your credit score is. And based on those factors, they're going to give you a number, which is like, this is your max purchase price that we can get approved from whatever lender it is.
So these are the big bank conditions, right? Are there like alternatives in case, like, let's say they don't qualify or,
Sure, sure. So, I mean, all lenders are going to look at those same things, but each lender has a different criteria. And so, the best banks or lenders are going to be A lenders. So those are like your CIBCs, Scotiabank, RBC, any of the big banks, BMO, for example, they're going to be able to offer you the best rates. But they also have like more strict criteria, right? But there's also B lenders, which sometimes are monoline lenders, and what that means is just that they only offer mortgage products. Like a bigger bank, for like example, Scotia, they can give you a debit card, a credit card, a line of credit. They can give you a mortgage. They can give you a car loan. They can give you a business loan. Like they have a lot of different products. But some B lenders are monoline lenders. They only, like First National, for example, they only offer mortgages. They don't have debit cards. And so for that reason, they only have that type of service. They're considered B lenders. Sometimes you have to pay a little bit of money to them upfront to arrange your mortgage, but they may have less restrictions. They may, earlier I was talking about your credit, your income, your debts, your savings. They may actually they may give you a mortgage, even though it looks a little bit more risky to a bigger bank. They might actually offer it to you, but it might be at a higher rate, mortgage rate, interest rate, and they also may ask for some cash up front, sometimes 1% of the mortgage amount. So for example, if you're buying $1 million home and you're putting 20% down, that's obviously $200,000. You're getting an $800,000 loan. They may ask for 1% upfront. They may ask for $8,000 payment, before you arrange the mortgage, but they'll give it to you, and it'll be a little higher rate than what maybe a Scotiabank would give you. But hey, guess what? You got the mortgage, right? So some people, sometimes they get into the market, they might go into a 1 or 2 year term. So they may go into this higher interest rate product to get in, and then maybe after a year or two, they may refinance back into like an A lender. And so some people do that in order to get into the market. It's a little tough right now, like to do that type of strategy because rates are kind of high. So you can imagine, if best rates are at 5 and 6% now, like, what are you really getting at a B lender? You might be at 7%. And, that
yeah,
might be tough for most people. So.
it's a lot.
Yeah, yeah.
Yeah.
And there's
Um,
also just to go further on that. I mean, that's a B lender. There's an A lender, and there's also like private lenders as well that they've always been around. And sometimes if you're really in a bind or you need to close or you really do want to get into a certain property, I mean, some people are up in the 12, 15, even up to 18% interest rates. But guess what? Like the criteria again is even lower. Obviously it's a lot riskier for that lender, but they're giving you the money and they're doing it because you're giving them a pretty high interest rate. So that's obviously the profit that they make from lending the money. So there's
Yeah.
options. Mhm.
Yeah. So in the States, there's been a lot of talk about extending the amortization period.
Mm.
Um, right now, I think in Canada, it's 30 years. Is that right?
Yeah, 30 years on the is the maximum, and you can only do a 30-year amortization if you're putting more than 20% down. If you put less than 20% down, which would be an insured mortgage, meaning that you need to have insurance from CMHC or Canada Guarantee, and there's another provider as well. You can only have a maximum of 25 years. But what does that do? I mean, extending to 30 years, it just extends the amortization, which actually lowers your monthly payment. But it just means that you're actually putting less towards your principal over that period of time. Like it just, the calculation is a bit different. Me personally, like I would probably go into a 30-year amortization because, I would prefer to like lower that payment. However, some people prefer to pay things quicker and they may opt for, a 25-year amortization just to be able to like pay things off quicker. Having it, extending that, I'm not sure if that's gonna happen. Here in Canada, I've heard, people trying to, talking about that in order to bail people out because extending the amortization is going to obviously drop rate payments for people. And it may allow them to actually like, stay in their home or like, actually afford the mortgage payments or mortgage interest rates that are in the market at the moment. But I'm not sure if that's going to happen. Already there's been situations where people had like fixed variables, which you'd have to maybe go and search that up on Google to get a little bit more info on what those are. But just to let you know, like a fixed variable meant that like your payment didn't change, but obviously the interest rate is variable, and some people were getting into like 70-year amortizations just because the interest rate went up so much, and they were paying at like a 2.5%, 3% rate, but their interest rate in the background actually did increase, and it extended their amortization even more than it was supposed to. But yeah, I don't know. Like there's some people that their interest is their mortgage balance is actually increasing as they sit in their home. As they make this payment, they're actually not paying off any principal, and they're in fact the interest rate is increasing. So like they're actually like their balance is actually growing, which is
Yeah.
crazy to say, but like that those
Yeah.
are situations that have happened over the last couple of years because of the rates having increased so much. Yeah.
Yeah.
Mhm.
So, what are some of the qualities or qualifications that people should look at when they're looking for a real estate representative?
Yeah, that's a good question. I would say that well, look, I mean, first of all, let me just say that there's about I want to say 65,000 agents in the GTA now registered to the Toronto Real Estate Board. When I started 10 years ago, I think like it was about 40. So, an extra 25,000 people have joined since I became an agent. And what another stat that I can give you is that the majority of these people are selling maybe nothing to two homes per year, the majority of that 65,000 number. And then, a large subset as well is maybe selling from like two to six. I think like what you should be looking for is somebody who has like experience in the marketplace, someone who can actually guide you. I mean, I think that there's a lot, and someone who can interpret the information that's out there because there's information overload for like any subject you can think about, and real estate is not an exception. You can go online and Google a bunch of stuff, and you're gonna get a bunch of different answers. But I think you need someone to really like hone in on like having a true answer for what your questions are. Everyone's situation is very different. And I think experience is something that you should be looking out for because, somebody who doesn't really have that, this is a big purchase, one of the biggest purchases of your life or sales. And you need to have somebody with experience and be able to provide you proper guidance. Another thing as well is, there's a lot of people out there who are on their own, meaning that like they're all in one. Having said that, like, they do all the paperwork, they help you search for the property, they go show you the property. And they're the only person working for themselves, which there's no problem with that. Honestly, when I started, I had to do the same. But if you have like a team with you as well, like, somebody who's, on their team that's focused on maybe helping you buy, you have an administrator, like somebody, an admin person who's helping you with the paperwork, somebody who has a few resources or like team members with them, that could be a benefit as well, because it just makes sure that you're not dropping the ball on anything that's happening. And, you have pretty much an assistant and everybody working with you as well, not just the one agent. So I think that's important. And, a lot of the time it's, experience with people that you know and trust. A lot of times there's referrals that come in from family members, for example, trusted people. And I think that that's actually big as well. In my business in particular, based on last year's numbers, like 85% is repeat referrals. So most people do continue to work with me when they start. And then they're like comfortable also like introducing me to their friends and family just because they've had such a good experience with me in the past. So I think all those things are probably things that you should be looking out for when you're looking to work with somebody, for sure.
So, Danilo, you mentioned earlier about the detached homes, not a lot of inventory. So, I think that what's happening is those who own homes are opting to stay where they are currently. In the long run, will that have an impact on the economy?
So I'm not sure if that's going to have an impact on the economy. However, yes, there's a lot of people who are kind of staying put. I think the reason for that is really because of interest rates. Some people are right now in a pretty good interest rate based on their last term, or sorry, their last refinance. They're probably in the 2 to 4% range. Most people, if they were to sell, they're going to be now going into this higher rate environment again. So that's what's causing a lot of people to not put their properties on the market. But however, that could change, like I said before too, in the next couple of years, because people, unfortunately here in Canada, most mortgages are 5-year terms. So after a 5-year period, you're going to refinance into something different, most likely. And that rate could be a lot higher. So it could cause some people to start selling. But yeah, it's just circumstances. At the end of the day, people are they still have to move because of jobs. They still have, I don't know, like there's still divorce out there. There's still death. There's still like a lot of like, natural things that happen that cause people to buy and sell. And those things happen regardless of what's happening in the economy and in our world around us, right? So yeah, I'm not sure if it's gonna impact the economy, but I think interest rates right now are causing people to are causing, is the reason why people are either holding off or moving forward. Interest rates do really impact buyer behavior. And so that's why everyone's always, looking for that next interest rate announcement to kind of gauge what they should do, and see how the public reacts, how the buyers and sellers react to this new change. And that's kind of been our pulse. Every time there's a interest rate change, it's big news, and then everyone's waiting to see what happens and what people end up doing. What I've noticed in this business is that it's like, a lot of people follow other people. And sometimes you got to go against the herd, but like if you start noticing that buyers are getting into the market, there's multiple offers, things are heating up, like it just, for whatever reason, more buyers want to get in. And when I'm screaming at them months before this all happens, that hey, this is going to happen soon, you should probably look into buying now. Nobody wants to do it because they're scared, because it's like, well, no one else is doing it. Then as soon as everyone else starts getting in, like now you're in as well because everyone else is. But guess what? The environment is so different. Like you're in competition now. It's tougher to get the property. Prices are going up, and that's just like what always happens.
It's like a herd.
Yeah,
A herd of animals.
Herd mentality. Yeah. Mm-hmm.
So what are some of the real estate trends that you're seeing, like double families purchasing homes, or like parents gifting their homes to their kids? Like,
yeah, so I mean, like gifting has always been a big thing. Prices are high in the GTA, so I've seen a lot of, gifting from, generational homes. Like a parent or parents might take out, money from their house that they've lived in for many years just to be able to help out with a down payment. That's been happening for a long time, for their kids to be able to jump in. I have also seen, parents and kids combining and buying homes together, whether it be an investment for the parent who doesn't necessarily live there, but sometimes also, yeah, homes that are they're using like basement apartments so that everyone lives in their own private spaces, and enables them to like lower their costs on a monthly basis and stuff like that. That is happening. I think that's been happening for a long time though here in the GTA, just because prices are high. Prices are high, and so like people find ways to like make it work for themselves. So yeah, I would say that that trend is growing. Like I've been an advocate just because from my investor side to get properties that have 2 units or more, just because I know that the numbers work a lot better when I have multiple tenants in one property. But I've over the years been, able to help a lot of people buy properties that have additional units so that they can supplement their monthly expenses with that rental income. And it's worked out really well for a lot of people who, listen to me or who were open to that type of setup. It's not for everybody, not everybody wants to be a landlord. Some people are scared of that. Some people are more risk averse. And I understand that completely. So sometimes I give them the idea, and it's really up to the client if they want to, walk that path. I think financially speaking, it's worthwhile. And I think if you do things correctly, like I know that Ontario is really tough on, the landlord and the landlord tenant board laws are very tenant friendly here in Ontario. However, having known that for a long time, it doesn't really scare me to, obtain rental properties and continue to operate here in Ontario as a landlord. So I think it could be a really good opportunity for people, and I see a lot of people doing that too. Mhm.
With the rate hikes, do you see that the value of the houses has gone down, or has it just been the same since you mentioned 2022?
Yeah, 2022 was like peak pricing, so it has come down quite a bit since then.
Mhm.
Having said that, though, since 2019, prices have gone up quite a bit. At the moment, we're kind of like level with a 2021 price, so we've almost like, and we're in 2024, so we've almost like eliminated that 2022 peak per se, and we've kind of come down to a 2021 price from what I see in the charts, and that's based on average price. So prices have come down. Prices have come down. However, we're in 2020, we're in January 2024. I have seen a little bit of a resurgence this month. We're going to see once the month is over what the numbers look like, but it's been a pretty active month. A lot of buyers are getting back into the marketplace. Like I said earlier, I am seeing multiple offers again. And I don't know if that's going to continue into the spring and into the summer and for the rest of the year. But I mean, it's looking like there's been pent up demand, meaning a lot of people have just been kind of waiting on the sidelines. Just to give you an example, in 2022, I think we had 122,000 sales in the Toronto Real Estate Board, which was like the highest ever. Okay, and that was accompanied by the highest price we've ever seen, also in February of 2022. But last year, I think we had 77,000 sales. So that's 50,000 less sales in a calendar year last year. So, does that mean that all those buyers have disappeared? No, our population is the same. Actually, its populations are growing because we're getting like 400,000 new people per year or something like that for the next few years. And so our population is actually growing. So I mean, these people have just kind of been sitting on the sidelines. They weren't able to do anything. They're scared about interest rates. They don't want to get into an environment where it might go up more and my payment might go up more, and people were scared. So they're not going to wait around forever. And I've already seen this year that people are kind of popping back. And, inevitably that might mean that prices actually could go up, whether that should happen, whether that makes sense or whether it doesn't. That's what's happening.
Okay. So
Yeah.
this segues nicely into my next question, because the real estate is usually an indicator when it comes to how the economy is doing. Are we headed to a recession? Did we dodge one? What are your thoughts?
Yeah, that's a good question. I don't think I don't think that question has been answered just with like this real estate change. I think real estate activity is a factor, but I think there's a lot of other factors. I'm not an economist, so I can't really speak on like all the different variables that impact what makes a recession, what doesn't. But I know that if we fuel, like if there's another bull run, let's say here in the real estate market, and then a lot of people start buying again and prices go up again, it could cause rates to remain high, because I don't think that, like I don't think the I don't think Canada and the Bank of Canada wants this to get out of hand again. So I think, yeah, I mean, it's a factor. I just don't know if this is gonna, housing is huge. It's a big part of the economy here in Canada, so they almost can't let it fail or let it like crumble either. So one way or another, I think they maintain prices and they're really, really sensitive to like what happens with real estate. So I don't know. I honestly, like, I don't think we know, and I don't think I don't think we'll know until it happens, to be honest. Sometimes there's lagging things lag when there's a change that happens, and I don't think we know enough
Yeah,
to
I
see
think
what's going to happen in
something
the
that
future.
we need to kind of keep an eye on, right?
Yeah, that's it. I mean, as a real estate agent who's actively, working with buyers and sellers, I see things have changed in January compared to, the fall of 2022 for 2023 for sure. I do see multiple offers. I see a lot of activity. I see people getting back into the market. Properties that have been sitting for months are selling now all of a sudden. That could be a start of like more of the same for the rest of the year. And if we do see an interest rate decrease, that's going to increase the volume of activity. It's going to cause more buyers to come into the marketplace. So,
Yeah.
I don't know. I don't know if we missed the boat here with some of these buyers who are looking for a deal. Those deals could start disappearing soon. Who knows?
Are you seeing any notable investment opportunities in the coming year? Like there's like tiny homes that they keep talking about,
Hmm.
commercial property. I guess, with people working remote, there's more opportunity for commercial purchases, right? What are your thoughts on that?
So I can't really speak too much on the commercial side. I do tend to do more residential real estate. I don't know if there's deals on that side of things. I know commercial properties for sale are super expensive in the GTA, and I know rental rates because I know some, business owners are not necessarily low. And they have been increasing over the years for sure. But on the residential side, at the moment, I say condos. Condos in the GTA are a lot cheaper than they were a couple years back. And if you can get something around 500, under 500, under 550, decent location, 1, 2 bedroom, that could be a really good buy because I don't think that it's going to stay at that price forever. And sometimes we have windows where there's opportunities for people, and you kind of just need to have that vision. And I know that you can look back not too long ago to see where that ceiling was. What were these condos priced at, like even 2 years ago? And chances are that we're going to get back to that number at some point. When I don't know, but condos are probably a good buy at the moment. Also, like outside of the GTA, or outside of the city of Toronto, prices have come down a little harder in regions like Durham, or out into Oshawa, Clarington, or out into like Kitchener-Waterloo area, Barrie, an hour away from the GTA, for example. Let's do a radius around the GTA, Niagara region. A lot of those communities, they had like really high prices in 2022, and those prices have come down a lot more than the city of Toronto. The city of Toronto is usually um what's the right word here? It's usually pretty resilient. It doesn't necessarily go up a lot, and it doesn't necessarily drop a lot. It's pretty constant. But cities around it fluctuate a lot more. So there could be an opportunity in like regions around the GTA, where prices could be a lot more favorable right now. And there's usually a lag effect as well. So if we see some activity, or heightened activity here in the GTA, then that could come to the outside region soon enough. And so it could be, an opportunity right now to look at those markets and try to pick up even a detached house at 500 or even less that I do see, in places like St. Catharines and Welland and, Bradford and Barrie, maybe not Oshawa, but maybe further east. I'm starting to see like decent prices. So if you're open to something out there could be an opportunity against something cheaper. So yeah.
And for investors, Danilo, with this regulation of Airbnb and, having properties that are empty, um, is that something that's concerning for investors or?
Yeah, definitely. I mean, Airbnb is something that I had an Airbnb unit in the last couple of years. I did sell that last year, March, and it was a condo in the city. It did well for about a year and a bit, but what, caused me and my partner to sell is just that, interest rates were going up. I saw that last year in the spring was a good moment because, sales were happening a little bit more. We were able to get a decent price on it. And if we didn't and we kept it, there was actually maybe another 2 or 3 interest rate increases since we sold. We probably would have been paying $1,300 extra per month just to cover on top of the rent that we were getting in order to just maintain the payments. And there's a lot of people who own condos right now that are probably paying those amounts, just to hold on to their property. So Airbnb stopped working for us because, you can only do in the city of Toronto Airbnb on a short-term basis for 180 days. And the remaining 180 days, which is like half a year, you have to do rentals that are 28 days or more. Okay. If you do rentals that are 28 days or more, you don't have to actually sign up for a license with the city of Toronto. You don't have to pay any registration fees. But because of that fact, that stock of properties, that inventory of properties that are wanting 28 days or more is a lot larger. And that just means it just dropped the price for like anybody looking to stay over a month in the city of Toronto because there were so many options for those type of people. And yeah, like now you have to get a license. I've heard that it takes quite a while to actually get that license from Airbnb. You have to do additional payments to the city of Toronto as well to run those. But you know what? I mean, there could be opportunities there because I've come across people who have made quite a bit of money just in those 180 days in the summer months, spring to fall, where they made a lot of money just because Airbnb is still popular. People still come to the city during those months, and it could be an opportunity to just do your research. I have a really good contact with Airbnb that manages those properties, and she's a really good resource to see if it's working or it isn't, which buildings are good, which buildings are not. And if you're looking to take a risk, any investment's a risk, and you want to see if those numbers could work for you on the investment side due to Airbnb. I mean, it's possible here in the city. But I would also say that, I am concerned about the restrictions. I am concerned about like government involvement and their bylaws and their laws. For example, the federal government has implemented another law which it doesn't allow for Airbnb investments to claim their expenses against their income on a tax level. So those are some tax savings that you're not going to get now as an Airbnb owner. There's also restrictions on how many days of the year you can do it, and who knows. And the reason I'm concerned about that is because like from one year to the next, like what's the next law that they're going to pass? What's the next restriction? It could be working today, but what happens next year? Like if you've been making money, then okay. But if you're just getting into this right now, I don't know. I mean, I'm a little skeptical to be honest. And I've seen other places around the world where they just straight out just say no. Like there's no Airbnb in this area, period. And
Yeah.
it's not impossible for that to happen in Toronto and other areas here in Ontario. So
Yeah, it's a lot to think about.
yeah.
So Danilo, how can people reach you if they need or if they have any needs with real estate or questions?
Sure. So I'm on all social media is King Realty TO, King Realty TO. You'll find my like business accounts. On Instagram, I do have danilo.investor if you want to follow me there. Social media is probably a good way to just connect. Obviously, it's a lot easier. But we do have our website, kingrealty.to, and you can also email Danilo at kingrealty.to, like Toronto.
Thank you, Danilo.
No problem. It was
Appreciate
great.
it.
Yeah, for sure. It was great having, spending some time and talking to you, for sure. Appreciate you having me on.
Well, there you have it, Bloomers. As we conclude this episode, I want to express my sincere gratitude to Danilo for sharing his expertise and knowledge in this ever-evolving world of real estate. We'd love to hear your stories. Feel free to share your personal journeys in the comments or via our Instagram account under bloom.withflores_. Your stories inspire us and help us grow together as a community of bloomers. Stay tuned for more content, and until next time, keep blooming.